Okay, folks, welcome back. This is our weekend review. The economic calendar from forexfactory.com for you guys that are new. This is where I get this information from, and I have it set to show only Eurodollar, Great British Pound, and the US dollar related news. Medium impact and high impact events are toggled on the filters that's offered on this website. So we stick to this calendar. I got a lot of questions as to where am I getting the calendar posts I'm putting on Twitter. I kind of want to move away from this portion, kind of like to make the videos a little bit more streamlined. You guys watched me do this the last few days on Twitter. I want to be more punctual about the daily volatility drivers that are coming in versus showing it to you one time, and I know most of you aren't even considering it again, so this way at least I'm needling you every day ahead of the sessions about what should be used as a smokescreen. And I think I just told you a little fib, didn't I? I have Canadian dollar toggled too, so that's why you see Canadian dollar here. I thought I took that off before the recording started, but I don't feel like going back in and editing it out. But it's good enough. So real quick, looking at Monday, the German preliminary CPI, medium impact, that's for Eurodollar, and London Open, high impact for GBP is current account and final GDP at 4:30 a.m. 8:30 a.m. New York session, Canadian dollar, RMPI, and then 9:45 medium impact Chicago PMI for the dollar index. On Tuesday, London Open, we have a member speaking, medium impact for the dollar, and 4:30 a.m. London Open, GBP medium impact manufacturing PMI, and 5 a.m. Eurodollar, medium impact CPI flash estimate, and then 8:30 a.m. New York Open, the Canadian dollar GDP, high impact, and 8:50 a.m. we have another member speaking, 9:15 another speaker, 9:30 a.m. another speaker, and 10 a.m. we have ISM manufacturing PMI, high impact for dollar, and another speaker at 1:30, which is non-impactful for me. Wednesday, the New York session, 8:15 a.m. non-farm employment change, high impact, and then 10:30 a.m. we have crude oil inventories. Now again, this is a weekly setup, so I kind of want to focus on that for Canadian dollar, because I know some of you are asking for a little different spin except for euro and cable, and I don't want this as a, hey, look, let me ask you what you want to do this week, because that's how we got messed up the first year. At least I believe that's how I got distracted with too many requests. I'm not like a DJ, okay, on the radio. You tell me what songs you want to play, and I'm gonna play them for you. I kind of want to keep things as they are because it works. So once in a while, I'll ring in the oil market, the index markets, and the Canadian dollar. That's in gold. So they're kind of like the only deviations I want to do. And then other than that, we'll stick to Eurodollar and pound. So again, it's not meant to be an all-encompassing commentary on all markets, all asset classes, and every pair. It's to teach you price action. So if you're focused and keeping your focus on two specific markets in general, used with a barometer like the dollar index like we used, then you're going to learn more doing that, okay? Because it's the same stuff applied to other markets. It's not specifically dealing with Forex, okay? All right, so what was it, Wednesday? Yeah, crude oil inventories at 10:30 a.m. So that will be another bread and butter setup. I'll record my trades for that day again, and that will be part of Wednesday's recording. And Thursday, London Open, we have a speaker. Then 4:30 a.m. London for GBP, medium impact service PMI, and then New York Open on Thursday 8:30 a.m. We have another speaker and another speaker at 10 a.m. for GBP, and then dollar at 10 o'clock in the morning, high impact non-manufacturing PMI, and then a 6:30 speaker, which is non-eventful for me. And then here it is again, folks. Can you believe we're already in the last couple months of this year, and the non-farm payroll Friday is upon us? So 8:30 a.m. for Canadian dollar, we have trade balance, high impact, and then dollar, high impact average hourly earnings, and then non-farm employment change, unemployment rate, and then another speaker, medium impact for dollar at 8:30. And at 2 o'clock, we have the Fed Chair Powell speaking, high impact for 2 o'clock. So Friday is going to be a rather eventful day. A couple different things in there that's going to push New York session around. We don't trade on that day. We don't trade the Thursday leading into non-farm payroll. Okay, so from a weekly profile perspective, we are looking at the best trading days being Monday, Tuesday, and Wednesday being done by New York Open. Okay, so if you don't have a trade on and or have taken something out and then just managing the residual portion on Wednesday's New York Open, then you take no trades for this week. Okay, that's our normal protocol for non-farm payroll weeks, because Thursdays and Fridays leading into non-farm payroll, it's typically not as symmetrical, it's more prone to hurt you. Okay, so just know that there's a odds of you taking a loss if you trade on Thursday and Friday. Just know that. Okay, and I try to preserve your mental capital by not wasting it on events that are more or less a crapshoot. Okay, all right, so let's move on over into the charts and get on with this. Okay, folks, so we're looking at the dollar index. I stripped away most of the things I had on from the last basically the last few weeks. We've been noting the sell-side liquidity pools below here. We moved above into this wick, and we have the rejection block here. Okay, this close. Let me pop it up here. So 98.92 and a half. Okay, basically 98.93, we'll call it. Friday's high came in at essentially that, and we hit the rejection block and we started to come off of that. So the liquidity that's resting above the marketplace is going to be here. So we have relative equal highs. Looking for reasons to expect further continuation on the upside. I'd like this, if it's going to do it, I'd like to see it do it right from the start of the week, Monday going into Wednesday. Then if it wants to go mixed because of non-farm payroll or explode and continue higher on those numbers, then fine. Okay, but really I'm focused on, with a bias leading into this new week, I want to see the dollar continue to go higher. Okay, so I don't believe that we need to go back down into this down close candle, which would normally be a bullish order block because they have a fair value gap in here. That, to me, if we didn't have this wick and we didn't spend this much time going down with two passes here and then consolidating like that, I believe they held price here. Okay, at least from what I'm seeing now, and this will change obviously based on whatever we do once Sunday's open and trading in Monday. But I think that they held it here with the expectation that traders would want to see it go lower. Like even we were looking for the sell side liquidity pools to take effect and run those out. The dollar itself, like I mentioned, is still inside of its large range, and we were depending on the individual analysis on the euro dollar and the British pound currency pairs. So if we know that the dollar is potentially either mixed or it's uncertain as to what direction it's going to work off of, then if you're going to trade, you have to go right to just your pair or your market and just deal with the one-sidedness of that analysis. Now, it does not mean that you can't find setups, because clearly you see me doing it and you see the results for those pairs come to fruition. But there's a lower probability a lower probability for those conditions to pan out because you do not have the sponsorship of the dollar behind it. Now, granted, dollar rallied and foreign currency went lower last week, but it's still inside of a large consolidation. Now, I would love for this thing to start working towards the lower level of the sell side liquidity, because that would allow foreign currencies to rally. And it would also change the long-term underlying premise to what's currently in play. Or trade above this high and just really show some strength, because it has been in this trading range the entire year. It hasn't really done much, even though there's been swings and we've been able to use all these points for reference. It has not been able to promote a long-term swing market. Okay, so it's been a very short-term day traders market, and it's hard to be a swing trader in this market. At least I'm admitting to you that it's hard for me. Okay, so when we leave this range here, or we start to tear into these sell-side liquidity pools, then I think that the market will return to a swing trader's model, whereas it's not that right now. And it's very frustrating for everyone that want to use that time frame, because it's simply not there, and you have to work with what the market's giving you. So in short and in concise terminology, I'm looking for the dollar to want to go higher and trade into this high. That's what I'm looking for Monday through Wednesday. Okay. After Wednesday, my bias goes right out the window, and I don't know what to expect, because non-farm payroll is always a low probability condition for me. Okay. So if you're new, or if you have not been keeping tabs, every first week of the month rather, we are expecting only trading Monday, Tuesday, and Wednesday because of non-farm payroll Friday. Okay, so just keep that in your journal every time. That's our protocol. Okay, so the highest probability trading is going to be on Monday, Tuesday, and Wednesday by New York Open. And for your notes, in case you missed it, we try not to take new positions during late New York on Wednesday, because you're approaching that Thursday threshold for the day before non-farm payroll, and it just doesn't really want to work with this in terms of symmetry. So it's a low probability condition. So therefore, we stay out of it. Now, if this comes back into this gap and trades into the order block here, okay, I will look at that as another opportunity to try to see the dollar go higher. I would rather it not. I'd like to see this gap be a breakaway gap. In other words, not fill right away. I would like to see this candle's high right there never be retraded to for a while. I'd like to see it just continuously move higher. Once it trades above this high, then I want to see, does it have a lot of speed, and does it have a lot of energy to want to move higher, or does it just peter above it real shallow, and then that's it? Because that's going to be a problem. It means we'll most likely want to move back into the range again, and then that's, again, a waiting game. Do we move lower to get these? Because once they start hitting these, it's going to be real easy for the dollar to go lower, because there's a lot of liquidity resting below there. Does it want to go above this high just to fake a break and then go lower? That could possibly happen. But right now, the range is from where we are on Friday's close to this old high. That's what I'm looking for. It's not a lot of pips, but this translates to a lot in British pound. Okay, so that's all I got for dollar right now going into the week. Just so you know, there won't be any teaching in this video, because honestly, I'm tired. I've been up all night. I've had very little sleep this weekend. I've been working with everyone that's coming in and processing payments going into the next month. So I'm going to relax and rest when I'm done with this video, and I'm going to rest tomorrow. On Monday, I'm going to produce a really good teaching for you, and also explain a little bit of things that I'm not going to go over in this video, but I will go into that on Monday. Now remember, I don't normally do a Monday video. It's usually a Wednesday night every week. Then there is a Friday or a Saturday video for the weekend. Okay, so just know that it's not a steady diet. I'm just throwing it in there because this video has to be abbreviated because I'm fatigued. All right, so euro dollar. Okay, oh, look at that. Look how lucky that was. Price came down, hit that red line. That was there on Wednesday, wasn't it? I believe it was. I said I'd talk about this once it get into the weekend review, and it went down and hit that. So we had these equal lows. The premise was we wanted to see the price move lower into the sell side liquidity pool here, and we wanted to see dollar continue higher. So right away on Wednesday, when we had our review, the next trading day, which would be here on Thursday, we were anticipating a run below these equal lows. So what does that mean? What does that imply? That's some of the things I'm going to talk about on Monday. What you can do when you get these insights from me, where I'm pointing certain things out, saying, okay, this is where the market should go. I'm going to take you into a sampling of where you can find setups based on the things I'm teaching you in the core content. So the bridging of the gap of, okay, this is what I said in the recordings, in the analysis and commentary. What do you do as a developing student to be able to learn how to do what it is you're here to learn? So right away, this first red line, I'll just tell you right off the bat. If you look at the low here, okay, so the low is 109.25, and 10 pips below that would be 109.15, and then 20 pips below those equal lows would be 109.05. That's this level here, 109.05. The low comes in at 109.04 and 4 pipettes. So it went down just a little bit below it in terms of pipettes. Nailed it, and then we had our reversal. So I want to show you what this looks like here without stealing too much of the thunder from Monday's teaching. But there's two other levels down here that I had on the chart that I said I would cover, but that's going to be part of Monday's teaching. So it's not important right now. Just know that the levels are in here, and I put them on the screen at the time. I'm not sure why it does that, popping around different prices. But I have not moved them. I haven't form fitted anything. They're exactly as they are from Wednesday. So I'd like to see the euro dollar make a little bit more meaningful run below these equal lows than just this shallow run here. Okay, so if we pop above Thursday's high here, let's play devil's advocate for a moment and say it goes against my initial expectations and it runs the high at 109.66. If it does that, we have a little bit of a fair value gap. It could just poke its head above this candle's high here, right there, 109.66. It can go into that and then roll over if the dollar wants to run higher, like we were outlining on the daily chart. That would be another scenario, because they would see this as running, and maybe this is a reversal, and then go lower and try to attack this middle line in here. Okay, or at least make another meaningful run below this low and expand below these equal lows. That's what I would like to see happen, but it may open up lower than the close on Friday and just trade softer as a result. Or we could, if we gap up higher from the close and we trade down, then that would probably lead to a run above and complete close of the fair value gap. Okay, so there's three different scenarios there with specific conditions as to why you would expect that to unfold. So go back and listen to the recording again, rewind it, and you'll hear me give you specific things that would lead to those conditions. Okay. All right, so let's drop into an hourly chart. Make sure I got this thing here toggled. And drop into an hourly. See, he didn't do what I wanted it to do. All right, so notice we have equal highs here. Remember what I said about the daily chart? It could run up into its fair value gap. In the hourly chart, look what appears right at that old daily high, 109.66 and 7 pipettes. Bingo. We have equal highs. We have a buy-side liquidity pool here, and then we have a SIBI, sell-side imbalance, buy-side inefficiency. So if it runs above these equal highs, how far can it go? Well, on the other side of this SIBI, you have this up-close candle, which is a bearish order block. So now we can take this horizontal line here. I'll just drop it right on here. and price could shoot up into the low of 109.76, which rounded to the nearest 5 level would be 975. Okay, so 10975. We could see that run. It would essentially do two things. It would do several things actually. Hit the bearish order block, close up the imbalance on the downside here. So all this movement down will get rebalanced with a movement up. Equal highs would be taken out. Sell side liquidity would be the next draw on liquidity if we poke up here and start to break down. If it clears this bearish order block, now this is the takeaway and the more important thing going forward. If we trade above this bearish order block, or the high at 109.88, we'll call it, okay? If we trade above 109.88, then I am not bearish on euro going into Wednesday. Okay, I would be expecting this thing to start going higher. Now, why is that a factor, and what makes me say that? Because we would be taking out multiple premium arrays. Now, premium arrays are what you're going to learn with the PD array matrix for looking at institutional order flow, and how the algorithm will look at specific points in previous price movement, and it will use those as old markers to work within using discount to premium. And that probably went right over your head if you're new, but trust me, we talk about it in extensive lessons, and you'll learn it. Just know that in your notes, I just gave you a couple different things to look for. The bearish order block is a premium array. Okay, if it goes above that, we're really not bearish, we're bullish. It's reasonable to expect this premium array of buy-side liquidity pool and the rejection block, which is the highest up close, and this SIBI. So if all these things here get filled in, knocked out here, you've knocked away multiple premium arrays and would otherwise lead to a sell program. In other words, the price should drop after running these equal highs or hitting this bearish order block. Then it should go lower. But if it goes higher, it's really telling you that order flow is bullish, so therefore, while we have near-term upside objectives for a possible retracement, should the dollar either pause or not want to run higher right away, this would be what I would expect in the euro dollar. This all changes, okay, if we move below this swing low here. Because below this swing low here, it's not necessary to go into this down close candle anymore because we've already done it here. This dip into here is enough work on this sell side imbalance that was inside this down candle. So all of this down delivery on price, we had another run of it here, we had another run of it here, and we went into it just for fair value purposes here and then expanded. Anything below this swing low here is inside of all of these bullish order blocks. So it's not that it needs to come back down here to be a buy. It would be coming down here to continue going lower. Okay, and it'll make more sense when I teach you on Monday. So that's what I got for euro dollar. All right, moving on to cable. This is a daily chart of British pound versus the dollar. And I wanted to clean this up and do a default chart, but it's already here, so I guess I'll just show you what that is when we get down the lower time frame. We had a run into this old high back here, which was our minimum upside objective. We hit that, and then we broke down. Broke this swing low here on Friday. If the dollar rallies, all of this in here, this imbalance, to this order block. Now, I tweeted on, I don't remember now, I'm so tired if it was Thursday or Friday. I mentioned that 121.75 is doable if the dollar continues to go higher. The reason why I said that was this bullish order block. Right in here, we have our imbalance. So I'll clean this up with trend lines instead of the full horizontal line. So it'll be different when I talk about both pairs on Monday night. So from this candle's low here at 122.09 to this candle's high 121.75, we round to because it's the nearest 5 level, because the market price is up here. even though the level itself is 74 here based on the high of that candle. When price reaches down into this candle here, it only needs to tap the top of this, close this buy side imbalance, sell side inefficiency. That will be enough to get another bounce higher. What we bounce to, it depends on what we see on Monday and Tuesday's trading. If we just go right on lower, then it would probably want to run up into this low here. And anything above that would take us up into the breaker, which would be this down close candle low at 123.98. All right, so let's drop into an hourly chart. And I'll zoom in here a little bit. Actually, I won't zoom in here. This is the most I'm going to get out of it, huh? All right, so we have the sell side liquidity pool resting below this low here at 122.70. So it's only less than 20 pips away. It'll be interesting to see where we open. I would like to see this particular pair open lower, not by much, but then come back up, fill the gap on Sunday, and then roll over going into Monday and Tuesday. That's what I'd like to see. Now, obviously, the market doesn't care what ICT wants or likes. It's going to do whatever it wants to do. So just know that that's my ideal scenario. Now, I do not like anything above these equal highs. Like, I don't see this as a run up here, take these equal highs out and then go lower. If it goes above these equal highs, again, much like I was mentioning with the euro dollar, I think things would be different on the directional buys if we take these out, because right above these equal highs we have this old swing high here, and if it's going to go here, look at the imbalances that are over here, and in here. So that takes us really up into the 124.20s. That's just not bearish in my opinion. To get up to here, it puts the bearishness on the back burner for a while. I'm going to talk a little bit about this run here and why I was talking about cable the way I did on Friday in my tweets. So again, that's all part of Monday's lesson. So it's not important now because it's already happened, but I'll teach all that stuff that took place on Friday and why I was saying what I said on Friday. I know you're looking at these arrows. I want to know what that is. I'm going to drop down into a 15-minute time frame. Okay. And you can see they had a high, low, failure swing, optimal trade entry, displacement. Price comes back up. Fair value gap is right in here. Down movement. Price is going to want to do what? It's going to go back up into that range and rebalance. It does it multiple times in here. And then on this run, I'm going to show you on a lower time frame, 5-minute chart. That's what I was working off of. All I was doing was practicing like I teach you guys to do. Okay, on Friday, I saw the market come up here, create the optimal trade entry, and I wanted to see price make an attempt to run below these equal lows. That was my target. That's what I wanted to see happen. Okay, I didn't believe that we would take out the low here. It's too late in the week, and if it's going to go below this low on a Friday, it would be too short of a run for time, so they can't really capture any downside liquidity just below here. Now, if it would have been like a Wednesday, then I would have taken a partial here and let the rest just keep going. But because it's Friday and it's late Friday, in here, that's like almost approaching London close. So that's what this was, a London close scenario based on the underlying structure that I'll give more detail on Monday, okay? I know it seems like I'm not giving you much here, but all I want to do is fill your head up with what the expectations are for Monday. At least just that, and then I can fill in any gaps for Tuesday and Wednesday, and with the lesson I'm going to give you on Monday night. But let me drop down into a 5-minute chart and just get rid of this, because I know it's probably irking you, because it's irking me now. I left it on the chart, but nonetheless, the market traded into this fair value gap. Okay, we wicked through it. The imbalance over here was closed multiple times, and then when this candle closed, I felt confident that as long as we traded up into this bearish order block, notice my entries up here. Okay, Here, let me show you. This is what you really want to see, the numbers down here. This candle, okay, this candle at this time had been going bullish, and it started to come out of the body of that candle here. So it looks like this. Okay. There you go. Okay, so as the candle started to drop and the close was, at the market price, was going lower and lower and lower, I hurried up and sold short while we were in the range of the body of that candle, knowing that this right here was just a run on liquidity. So at this time, the chart looked like this. It looked like, good grief. Well, it looked like that. Or like that, yeah. Okay. So we had a liquidity pool here, and then my eye, just like yours should be trained to see it, equal lows with a bullish order block. Okay. I already know what you're asking. Why is this an order block, Michael? Why ain't this an order block? And why ain't this an order block? It's in the core content. Too much stuff to talk about in one video. But the equal lows here, sell side liquidity pool, that was a draw on liquidity, trading into a bearish order block, and the market traded down, cleared this sell side liquidity pool, retracement. This is really deep. Yes, it's what happens sometimes. That's why your stop isn't jammed down real tight. You watched me do a couple trades last week and recorded it, and you saw what happened when I brought my stops too close. I got stopped out. I had to go back in again. This retracement moved lower and attacked the equal lows here. The low one here is 122.96. So what's 10 pips below that? 122.86. What's the low on this candle here? 122.87. So we're only off by not even half a pip if you use the pipettes. The market traded down into it here, and then finally came back and gave me an opportunity to get out. I was watching this retrace in here, and I bailed on that, and I was not in to make this another attempt to go lower than the bodies of all these candles in here. Okay, so all these wicks here, this is just a run on liquidity, and this is a much more, I guess, more convincing move lower because it's on bodies, not the wicks. So I think it's all leading to a little bit lower prices on cable, but this was simply just a practice of just using institutional order flow. I do this every single day. I pull up a 5-minute chart or a 1-minute chart, and I work with liquidity, and I practice and I practice and I practice. And by doing that every single day, you get better at it, and you'll see things. You desensitize yourself from the fear, because even though you're working with a demo account, you still encounter the fear of being wrong, because if you get it wrong, it feels like you're not doing anything going towards progress. It feels like you're floundering and wasting time. You need to forget that, okay? You need to engage and forget about the profit, forget about the loss, and forget about the time involved in the transaction of what you're practicing. That's the whole purpose of doing it with a demo, because if you do that in this controlled environment where it can't hurt you, you can't make money to get greedy, okay, all the proper learning conditions exist in demo. You have to stay in this until you get so, indifferent about price. You don't care what it's going to do. I have certain things I would like to see happen in terms of scenarios and how to get specific setups, if you will. But I'm not terribly excited about either one, coming to fruition or unfolding. I don't need them to. I allow price to show me what it wants to do. So when we practice learning the core content, and you'll learn institutional order flow entry drills using fair value gaps, all those things are going to help you become better at reading price. And over time, what will happen is, by default, you will find your specific model using my core content, and you'll put the pieces together to make your unique model. You'll see, like I talked about in Wednesday's video, referring to gold. I wasn't going to talk about gold, but I mentioned how your model could be fair value gap entry to fair value gap exit. Or it could be a bearish order block and then trading into a fair value gap to take your profit. It's whatever PD array that you learn about in this course, in this community, that makes sense to you. Not all of you are going to like order blocks. Once you understand fair value gaps, you might go there. And others may say, well, I know what you're saying about the fair value gap, but the order blocks make better sense to me. And there's no one better thing than the other. And you don't need to be a master of all of them. But being familiar with all of them generally will first, number one, be required, and then you will gravitate to one or the other. Okay? Some of you may want breakers. Some of you say, okay, I can see a breaker, but I'm scared to take it, so then I'm going to trade a mitigation block, which will be a later order block that forms after major or intermediate term high or low forms. And all those factors build into the foundations of your unique trading model. Don't rush this. Don't try to force it to happen real fast. You need to really spend time with the lessons and then practicing, because the epiphany that you're going to have that's required is that you're going to see these things because of repetition. And you need to do them when I'm not around. So I'm only talking to you 2 times a week if you're not counting Twitter. Wednesdays and then on the weekends. I'm telling you what to focus on, where the market may gravitate to. And on Monday, I'll tell you exactly what you can be doing going into Tuesday and Wednesday with that idea or that insight. Okay? So I guess, let me see. Let's pull up gold real quick. I wasn't going to talk about it, but I feel obligated because I feel like I'm not giving you enough, because usually I give you like a lesson or two. I'm tired. You probably hear it in my voice. I'm really tired. All right, so let's zoom in here on gold. I mentioned we had a fair value gap in here. Let's put this on real quick, and then I'll flesh this out a little bit more in terms of commentary. There, and then we have the one here. All right, so we have a fair value gap in here. Market comes down, comes back up into rebalancing, where the candle only goes down. This candle's low and this candle's high. There's only one little area for a particular price range where price went down. The market will want to go back up. IPTA, the interbank price delivery algorithm, will offer price up to there, and once it does that, then it goes lower. Okay, we have equal lows in here. Well, actually, you have triple lows. You have one here, here, and here. So there's a lot of sell-side liquidity resting below that. It makes perfect sense for this to drop. It's also bullish for dollar should it do so. How far can it go down? Well, we have all this wick in here, so there's really no fair value gap or imbalance to worry about. This over here has been filled in with this run. So below these equal lows, the low here comes in at 1482. Fair value gap is over here. A full closure on that would take us down into 1447, and the top of that fair value gap is 1456. So this is what I would look for gold should we get a nice run higher on dollar and weakness in the yellow metal here. So if we take out this swing high, gold's bullish, dollar is going to bed. It's going to go lower. Okay, so that's your fulcrum point for gold. If we take out this high, it's really bullish. I mean, it's really, really bullish. So otherwise, we're looking for it to trade below here, dip into this sell-side liquidity pool. No imbalance to talk about. So what's it going to reach for? This fair value gap. Okay, so it may go a little bit beyond that because you have this old high over here. So don't be surprised if we get lower, if it doesn't go below this fair value gap and trades into this high a little bit. Okay, and that's going to be it. That's enough, I think, for now going into Monday to watch and worry with. So until I talk to you on Monday evening, it'll be, I guess, 3 o'clock. I'll have it up before then because I have to pick my kids up after school. So it'll be sometime between 1 o'clock and 3 o'clock Monday afternoon. The video will be posted, and I'll send you a tweet, let you know it's been posted. You can click on the link. It'll take you right into the section of the forum where you can find it. Until I talk to you then, I wish you good luck and good trading. Enjoy the rest of your weekend.